welcome to the closing beat, everybody. On our new set here, this is Studio 2J. If you've been following us along on social, we've been trying to move to this new set for a while and finally got it mostly done. We got a little bit to change, but this is our closing beat show. If you've never seen it before, it's where we cover the stock markets. We go over sort of the good, the bad, and the ugly for the day to try to help you out better understand the markets. We're financial advisors here at Jazz Wealth, always trying to improve and find interesting ways to teach our customers. We're a teaching firm, and so, for example, this Thursday we're doing a class on analysts, the analyst ratings. What do they mean? Where are all the analysts right now? Like, what do they think about the markets, each individual sectors? I'm going to give the top stocks that are sort of seeing the most analyst upgrades at the moment. You know, where is all this and how do we make sense of it? Well, that's one of the things we're going to cover this week in our class. We call it Wine and Wealth sometimes, and so that's one of the things that we do there for our customers. Actually, if you want to take a quick look, I'm going to use this today. This is our market dashboard, but if you go into it, we call it the dojo. You go into it, you can actually see all the previous classes that we've done all the way back till the beginning of time since we first got started there. And so anyways, that's our class this Thursday. Also, I happened to find the data. I've been telling customers this for a while. The data on like what happens if Monday mornings sell off given percentages or they rally. Like, what do we expect? What's the data show for the rest of that, rest of the week? Meaning, is it better if the markets start off good? Is it better to try to buy at the end of the week, or did you miss your opportunity? If the markets start off with weakness, what's the data there? I've been saying I'm going to share that with you, so I'll start the class with that on Thursday. And so that's that. I'll save the rest of the marketing pitch for you. Also, good day, the pizza company. Thanks. Pizza company came by and said, congrats on the new studio that we're setting up here. Gave me a coupon for a free pizza. I almost cashed it in right away. Anyways, let's get started. So you got the markets here back and forth. Bottom right-hand side of your screen, you can see a little chart shows you the every 5 minutes how the market's traded there. So you get a sense of the sort of whipsawing back and forth with no real progress. We just traded kind of flat. We had the Muller report to kind of deal with, although it wasn't like a big deal there, I guess. I don't think that's done, by the way. But anyways, we got that. We had Apple news, of course. We'll cover that here today. You have overnight, if you happen to follow the Asian markets, you had the Nikkei down 3%. You had China down 2%, Hong Kong, and so on and so on. Just all nasty to the downside. Keep in mind that that's partially them responding to what happened to us on Fridays. So in a couple hours, they'll open up for Tuesday's business. Remember, there's a time difference. So when we have a bad day on Fridays and we close, their markets have already closed. Their weekend has already started. And so thus you usually see that on Mondays when we come in, you get to see what happened with them overnight. Their day starts Sunday night at about 6 o'clock, 8 o'clock Eastern time, if you follow that sort of thing. I don't know if you care. Just like talking about it there anyways. Okay, market-wise, let's take a look. We had the inverted yield curve to deal with, of course, last week. It may be a little blurry. Sorry about that. We got some tweaking to do here. But you see the S&P 500 basically flat today. Nothing really happened. Down an eighth, like not even 0.1%, right? 0.08%, not a big deal. Can you see that at the top? Yeah, you can. All right. So the S&P just a little bit lower on the day. I'll tell you real quick, Art Cashin. Do you guys follow Art Cashin? This is the guy that comments usually in the mornings. He's on the CNBC. He absolutely nailed it. His quote backed it up, right? We've been talking about this with the inverted yield curve. Every recession since 1962 has been preceded by an inversion, but not every inversion has been followed by a recession. So true. We went back to 1962 just to study and check it out. I've been sharing that data with you. I did with customers last week as well. He is absolutely right. He just had a more elegant way of saying it than I did. Great guy, by the way. And so when you hear this inverted yield curve thing, first of all, if you're one of our customers, go watch last week's class. Went through the whole thing, all the geeky details. But now you know what I mean? Like, it's not like that big of a deal. All right, let's take a look at the markets. Here's the S&P 500, a lot of nothing going on today. Nasdaq a little bit lower on the day, but not a lot going on. The Russell was the exciting part of the story, although, and I'll give you a little secret. If you go on the dojo and you happen to be looking, there's an arrow now. We added a little secret menu for you. You can see that you can draw on the charts and have a good time with that. Oops, I'll leave it just to this here to show you and sort of illustrate that the Russell 2000 is trading still in this little downtrend. Could not get above the 200-day moving average, which is my red line in this case. And so the other markets could. So it was no big deal. We got above it. Remember, the Russell, we keep saying that's not good. That's not good. The Russell should be trading a little bit better if everything is actually as good as expected. So although it had a good day today, you guys look at that and you go, oh, you're not fooling me. Now is not the time really to be diving in and betting on the Russell based on what it's doing, not based on my opinion. Sorry. All right, what did well today? Well, gold, that did pretty good today, broke to new highs here for the month, right? So if you're following along with the price of gold, GLD is an ETF you can use to follow that. GDX is a gold mining company, gold mining ETF, and so these are like guys that go drill for the oil. They go physically chip away for the gold and silver in there. Some copper companies, I think, as well. That was one of your better performing areas of the market, up about 2% on the day. I happen to notice home builders did well also. If you look at the XHB, that was nearly a 180 from what happened on Friday. So we had a very strong move on Thursday, an immediate 180 on Friday. Today we almost erased everything to make it a two time in a row 180. You don't see that very often, so I kept staring at that one today. And then also I wanted to point out, if you like the banks, here's your large banks. The XLF is an ETF you can use to track that. No real bounce. Not really anything going on there. We look at the regional banks, no real bounce. Still severely extended in the short term. Nobody really seemed to care. Nobody really seemed to care, right? You would think people would buy that dip. That gives you a hint going forward that we're not immediately just reversing course, right? If you go back to the previous dips where we've seen that, you'd see a pretty sharp drop, and then you saw buyers come in, that sort of V-shaped bottom in there. We're not seeing that this time. I don't know if that matters to you, but we're just not seeing it. All right, let's get on to what everybody actually wants to talk about. Apple. Let's geek out on Apple here for a second. So, Apple down over 1% today. Last week we talked about their announcement here, the product announcement coming up today, and service announcement. We said, look, Apple sells off typically on the day that they announce their product or service. So did a little research over the weekend. Didn't want to leave you hanging. Hang with me here for a second. Check this out. This goes back now. This is something I've just enjoyed doing for a long time. iPhones. So we'll go back to the beginning of time, since the first iPhone came out all the way to this most recent XRS or whatever. I'm not an Apple guy. I don't know. The most recent announcement here back in September. So the average gain or loss on the day of the iPhone product announcement is negative 0.5%. It is only positive on iPhone announcement days 30% of the time. Right, 30.7 to be exact. On an iPad announcement, the same day if they happen to announce the iPad, or selectively if they announce the iPad individually. Going back to the very first iPad all the way to the most recent, the Mini 5 and whatever. So average trading or average gain or loss on that day is negative 0.7%, only positive 38.5% of the time. The iWatch, or Apple Watch, or whatever they call it, there hasn't been as many of those. So we got 4 different announcements that came out. Average gain or loss is negative 0.85 on the day they made the announcement. So I just pointed this out because I remember before I had told you guys, we always, as traders, we used to say when they make an announcement, you short the stock. You just short it on the day that you want to play it, and that was sort of our approach. And I wanted to give you the data behind that because I didn't want it to be like my opinion. Now, here's the thing. There's a different story, and I didn't know this, right? There's a whole different story when it comes to services. What was the announcement today all about? I mean, services, right? What'd you get? You got Apple TV Plus, Apple Arcade. We need more games. So Apple Arcade, the Apple Credit Card, Apple News, Apple Oprah, Apple Big Bird, right? Everybody was there. Apple Jennifer Aniston, by the way. So you got services galore now. Now, if you take a look at all these previous services, they've announced. What are Apple services, by the way? We know a phone is not a service, it's a product, right? It's a physical object. An iPhone, an iPad, a Mac, the AirPods, by the way, that's also a product. What are their services? iTunes, the App Store, the iTunes Store, I guess, when that came out, or they improved on that. Apple Music services, right? So they just basically came out and said, we hear you, Wall Street. You want us to have a bunch of services. Here you go. And so they announced, I mean, just everything. I couldn't even keep up with it. It was so much. Now, let's take a look at this. Let's look out in history and say, all right, that's great. Well, the stock's closed. I can't make any money off that, Dustin. How do I make money going forward on Apple? Well, if you look at every time they have a new service announcement, it's going to be 4 of them, going back to iTunes 2001. If you look back over the next month, the average gain for the stock is 17%. Positive 75% of the time, meaning there was only one time. It was actually Apple Music where it was lower a month after announcing Apple Music. 3 months later, Apple Music still held it back. It was still lower 3 months after announcing the Apple Music. However, average gain, if you didn't invest it in every single one of those announcements, 19%. If you look out 6 months later, average gain 7%. Now, to be fair, when they announced the App Store, that was right before 2008, so everything took a hit there. That's sort of a skewed number. So what, and then just for fun, what's the best announcement you could invest in and still see like the biggest gain 6 months or a year later? So the best sort of thing that you could invest in happens to be it's all services. The Apple services, meaning any of the things that we saw today, or Apple TV when that thing first came out. So average gain a year later, 30%. And then the AirPods, I won't use those. That was in there as well, but there's only 3 of those, so it's kind of hard to give that sort of statistic on that. But hey, just to give you an idea there, right? So that is what, I mean, that just kind of backs up the data there. I just wanted to be able to share that with you because I told you guys I would look that up. Anyways, moving on. Don't mean to take too much of your time today. You got Boeing in the news again today. Come on. Well, and now also, to be fair, Apple did really well leading up to the announcement. That's also normal, but the fact that it sold off, now you guys know, is not that big of a deal. Boeing added about 2.25% here today. They hosted some pilots over the weekend, some engineers, some tech gurus, some software people to kind of show off and to test the sort of software update. Wednesday, they're going to do an information session, and the stock basically is holding on tight right above its 200-day moving average. You like that if you're either you bought the dip, or you're thinking of buying the dip, or you own the stock and you want it to stop with the dip. So not bad there for Boeing. Biogen, brilliant on these guys' part. Remember, was it last Wednesday? They stopped that Alzheimer's drug that was in the final late stages. It just wasn't very promising. They stopped it, and the stock fell 30% over the next 2 days. Biogen now says, hey, well, since we're not going to be spending money on this stuff, we are actually going to buy $5 billion worth of our stock back. Brilliant, right? Brilliant. So the stock a tiny bit higher today on the news. They're already buying still another $2 billion as well. So a total of $7 billion in shares they're going to be buying back. I don't know if you care or not, but I thought, hey, that's smart. Stock tanks say, hey, we'll spend some money buying back shares. It'll be some time still. Tesla continues to move towards the bottom end of that range, right? So if you're in the dojo, you're playing along, you're one of our customers, click on the little guy there. You could draw a line if you like to. I'll get rid of the thing there because I don't need it anymore. So we've been talking about this range, right? You got a series of lows, right? Easy little downtrend there, and I won't take the time to draw it, but a series of little lower highs, right? Moving down through the lows there. So we said, look, no one's really interested in Tesla until it falls down and gives them a reason, that support area about 250. I think it's been about a week and a half since I've been saying that, people would be interested there. That's where you find technical traders that go, okay, if I'm going to take a shot, I'm going to take a shot at a likewise, like a worthwhile area where I know there are other people that will bet on support. And so you saw a little bit of that today, right? If you follow a 5-minute chart, kind of went down into it, and you saw a little volume kick in if you happen to pay attention to it. But That's that one there. So we'll see what happens. What'd they do? They raised their prices by like 3% on existing inventory because sales are a little bit weak. RBC, by the way, lowered their price target to 210. They were at 245. Now they're saying, hey, it breaks through that support, goes down to 210. I don't know if that turns out to be true, but if you like it at 250, you're going to love it at 210, won't you? Hey, a couple other things. If you like reading Barron's is popular for posting articles over the weekend that tend to grab a little bit of attention. They said you should steer clear of the Lyft IPO. Get it? You get it? You right? Steer clear. Okay. Anyways, the IPO comes out on Thursday. I did a video to go through those geeky details about Lyft. If you're thinking about investing in it, at least then you'll know what you're up against, good or bad. It's up to you to make the decision, not me. And lastly, Nike. So Nike was one of those interesting ones today. You know that lawyer for Stormy Daniels? First of all, you just look at the guy, right? The guy, he's like always angry looking and stuff. That guy was up to no good. He tried to extort Nike for $20 million. Nike said, nope. They went to the authorities and basically ratted him out immediately. So the stock was a little bit higher. It did initially tick lower on the news, but finished higher by the end of the day. Hey, that's pretty much all I got for you here. I've been thinking about pizza this whole time, so sorry if I'm a little distracted. If you have any questions, happy to answer. We'll take a look at anything you want to take a look at. Amazon. So Amazon, over the last few days, we've been talking way back. We've been talking about it being stuck at the 200-day moving average. That did break through and now starting to pull back. I think you let it keep pulling back, right? You're happy if you own it, right? There's no need to do anything, make any adjustment or anything. If you're looking to buy it, you kind of hope that it sells off a little bit with the market over the next few days, if that's what happens. Bill likes the idea. Some Tesla back to the bottom end of that range. Yeah, 250. That's the magic mark. And I wouldn't be surprised if it went like 248, 247.50, somewhere in there. Because if you happen to look at Tesla, it never just stops perfectly. There are stocks, I've studied this upside down and backwards, I can promise you. There are stocks like, is it still around? AUY. So there are stocks like AUY that you can count on support. There are stocks like AMAT, Applied Materials, AMAT. You can count on support from a trading perspective. These are stocks that are pretty true to technical support areas. Then there are stocks like Tesla, which have so much activity, so much excitement around it, that they tend to, you got to use your support areas as zones rather than say that it's a specific number. So anybody that says, I would buy it at the 250 support price level right there, you got to take it, give it a little range to work with. Same with the moving averages, by the way. Do we have any favorite travel stocks like Royal Caribbean or anything? If you were in the cruise line industry, I think Royal Caribbean is the better of the two major ones. I don't think Viking is public, but if they are public, then I'm sure that stock got hit kind of hard. That was pretty cool to see. I mean, I'm glad everybody's okay, but that was cool to see. As far as travel goes, yeah, you're right. With the Airbnb, I don't know anything about valuations or that on Airbnb. I'll try to do a similar video like I did with Lyft when that gets closer. But I think we're going to have Uber and Pinterest up first. But I like the idea of Airbnb for a travel company, right? That's the whole disruption side of things. Yeah. What was the... no, we're past it. It was in February. Yeah. And by the way, if you like playing like super discounted beatdown stocks, how about Trivago? I'm not suggesting it. I mean, that's just happened. I just happened to glance at it. Hey, I think Jacob, 5G on Apple there, I think that becomes more interesting, especially when they were talking about their gaming today. The idea of gaming in a higher quality, not just like a ping pong kind of a game. I think they're sort of going to be leaning on that a little bit, so I like it. Facebook's still pulling back. So what's interesting here, this goes back to the last earnings announcement, by the way. Nobody has any good reason to buy or sell Facebook. This was very, very similar to Advanced Micro Devices, AMD. Very similar to that, where we said, look, there's just no reason for anybody to do anything until earnings come up. Let me see if I can pull this up. Yeah, here's AMD. all through this time, pick any video, any daily update that we did in these first few weeks of January here, and we were talking about, someone wanted to buy AMD and was saying, there's just no reason. There's no reason until we see their earnings. The stock trades sideways, then you have a reason. Facebook sort of feels like the same thing, which is unfortunate because it's got a long time until earnings. But look what's happening. Nobody is really willing to commit significantly outside of this, what I would consider a little range for Facebook. So you've got this back and forth, but until you break below or push above this 173, nobody's like really interested in kicking this thing off into a new uptrend. Over here, you got consistent, steady institutional buying as every pullback happens. I mean, that's consistent. Over here, nothing. So the stock is basically telling you that nobody knows what they want to do, so I won't pretend like I know what I want to do. It looks higher in the short term, though. XOP, yeah, that was a little bit lower today, right? So it finished positive, but a little lower today. Oil pushed back a little bit. And if you happen to look at the price of oil, it started the day by pulling back all the way on top of that support line. I got to extend it now, right? And people were looking for that support there. So I put it actually in the description, the stair stepping of oil. Oil continues to stair step, and you know with any stair step, you pick your foot up and you drop it, but it never goes back to the bottom step. You keep going up steps. So you can almost see it perfectly. You can draw little lines. Here's the prior step, makes a move up, pulls back to the step, makes a move up, and right now it's kind of in the sort of dropping its foot stage there. Yeah. Cool. Semiconductors. Did I not mention them today for you? Semiconductors all week on the day. MU, you're right. Andrew closing the gap there. And then if you follow SMH, is kind of the one that I like to use, all the way back to the 20-period moving average, and saw volume right there in that right on the 20 moving average. So got pretty good support there. Kind of interesting. If that helps you. Okay, well, I think I've done the trick here today. I hope you enjoyed the new set. If not, I don't really care. I enjoyed building it, and we'll be moving on to other things. I think I need something like better than that. I don't know. That's like the world's tiniest picture. We need something else. Maybe another sort of monitor to show what's going on. We'll see. All right, guys. Have a great rest of your day. I hope you enjoyed somehow. Thanks, by the way. I think got the report today. We hit 40,000 subscribers. Never thought I'd have over 100 people. I'll be perfectly honest with you. Never thought more than 100 people would care to even participate in what we're doing. So super, super thank you. Really appreciate it. If you haven't hit the subscribe button yet and you like what we're doing, come join the team. That's all I ask. All right, have a great night. See you later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.